Traders will get their first chance to respond to the weaker than expected payroll data that came out late last week. That, combined with a rise in Chinese inflation in March, has stock futures trading down this morning. I'm Linsey Bell, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Linsey Bell with TheStreet, and together we bring you the Morning Call Express. Last week, stocks slid after a first quarter performance that was the best in 14 years. We're definitely getting a correction in the market. Scott, but how are you reading this? Is this a healthy correction, or is it something we should be really concerned about?
At this point, everyone was looking for a correction, and finally the market started to give some signs that we were involved in a correction. You know, about 2 weeks ago, we talked about IBD going to market under pressure. That was your time to lighten up on some loose longs. Last week on Wednesday, we talked about market going in correction. Finally, we had enough distribution days to calculate that, you know what, institutions are selling. That was your time to get out of more stocks, maybe get to cash. So on today's gap down after the Friday's number, I think the next day or so is more of a time to cover shorts and look for acute longs versus selling here and pressing shorts.
So why don't we take a look at the SPY, because, you know, what technical levels should we be looking at trading today?
Well, at this point, we're opening up near very important technical levels. Okay, we're looking at around 1375. If you look at the chart of the S&P or the SPX, you will see that, you know, here's where we broke. Okay, you want to talk about trends. Here's your macro trend, and then here's your intermediate trend. Okay, and then this is when that momentum trend was broken around Wednesday of last week. This was a time you could have gotten rid of a lot of your stocks, and you wouldn't have had a lot of the pain of today. We paused on Friday ahead of this, you know, small upper floor, you know, but look, it wasn't very potent, it wasn't very strong, and now we're going to be opening near the 50-day. I think that this 50-day moving average around 1370, 1375 will be an area to cover, and maybe look for a cute long. Okay, but then we have to measure the bounce, and if that bounce is feeble and faulty, I do think there's a big percentage odds that we could see this 1340 area, which was that, you know, that the correction that we saw late February into early March. So right now, 1370-ish, I wouldn't start pressing shorts in the next day and a half. But if we can't bounce off there well, I do think we can see this 1340, and that would give us about a 6% correction off the highs, which in my book is very, very constructive / healthy.
So you should kind of have a plan going into today and just wait to see what happens. Why don't we talk about some of the stronger names? The Qs have been really strong, the large cap names. Is that something you might want to be positioned in today?
Well, what you want to do is you want to look at the leaders, and the Qs and tech have been the leaders. And within there, you've had stocks go off on their highs last week when the market was correcting. So we need to watch those leaders to see if they start correcting quickly. If that's the case, we shall go deeper in this correction. If you look real quickly at the Qs, you will see that, you know, it's still at this upper level. This is, and off the charts, we talked about this little outside day or this faulty day, a time to sell. Then you had a quick little move to test this trend line, and now we're opening below. I think you have to look at the Qs, you have to look at this level here. The level here is around 6440, but I do think, though, if we get down to 1340 in the S&P over the next, you know, few weeks, this will be the level that holds in the Qs. And today, I'm going to watch Apple very close, because obviously Apple is the leader. It hasn't gone down whatsoever. It closed in the highs, you know, not even caring that we're in market correction. So let's see how it acts. I would write down this level of about 623. If it holds at 623, I think that, you know, today we could actually see a decent sized bounce. Then you have the 10-day, which we've held many times. If you look at this corrective pattern, every time that we had a high, we held a 10-day. Here, we held a 10-day somewhat. Here, we held a 10-day. So let's see if we hold a 10-day again. If we hold a 10-day again, I think the correction in tech will be a bit muted.
Talking about laggards, though, financials. Last week, they were the laggards, which is different from the first quarter because they were outperforming. So what does this mean? Is this pullback an opportunity, or do we wait for more of a pullback?
I think it's an opportunity, and it's interesting to see that composure change, because the XLF and the financials led the way. So last week it was almost like a gift to see that they got a bit weaker, because that also gave you some clues to sell. If you look here at the XLF, you will see that it came into the bottom end of the range before the market. It lost the 10 and the 20-day, so that told you to sell some financials. You look at JP Morgan also, it lost a 10-day. I tweeted out there saying, get out of some banks. First time JP Morgan lost a 10-day. Look how long it's been riding it for. So that was part of the composure change. So I think the deal here is you have to watch for a composure change. And we had one in the past 2 weeks. So hopefully you sold some strength, you cleaned up some lungs, maybe you got yourself short. And if you watch the long version, we'll get into depth about the leaders you should watch and the levels you should have written down in order to stay safe and profitable as we move forward.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.